Welcome to G3 Investors, where we trade ETFs using a systematic trading model to make money in any market and to always minimize our losses. We're going to take a look at the week ended July 15th. Stocks rallied nearly 2% on Friday on retail sales growth of 1% for June. And natural gas jumped 6% on an output drop, but Friday's rally was not strong enough to overcome earlier losses during the week. The Nasdaq lost 1.6% for the week, the S&P 500 was down 0.9%, and the Russell lost minus 1.4%. Our model gained 1.8% for the week, bringing our month-to-date gains to 2.5%, and our year-to-date gains to over 88%. Our model continues to crush its benchmark indexes. The S&P 500 we're beating by 107 percentage points, and the Nasdaq by 115. If you like videos like this, like and share, and you can follow me. There's my YouTube channel, and if you want to become a G3 patron, you just highlight that into your browser and sign up. Now, this is a 5-year weekly chart of the Nasdaq Composite Index. You can see here that the market continues to coil sideways along this solid red line here, which is the 200-week moving average. So we remain in bear market territory. Now I'm going to look at 6-month charts to look at the ETF strengths and weaknesses. Here we have the Nasdaq Composite Index, the 100 QQ Trust, and you can see it's moving sideways. Likewise, the S&P 500 is moving sideways, as is most of the market. However, there are some ETFs that are trying to gain some headway. Here's SMH. You can see it popped above this little sideways consolidation, and we took a position in it at 210.50. UNG, that would be natural gas prices, and it made a big move on Friday, so we took a position in that one also. Now XLV, which is healthcare, this is one that a strange week, but to me it seems like it's wanting to get back up here around its 200-day moving average. This is a nice move off the bottom, so that one is trying to get stronger. I'll put that in that category. There's not much good categories in this. XLV is healthcare. We just looked at that. XLE just made it above its 200-day moving average here. So trying to hang on, shall we call that one. And then USO, which is the oil fund or oil prices, looks to me like it's headed towards its 200-day, but it is above it a little bit, so it's hanging on as well. Now there are some ETFs like XLF, which again I say it appears to me that it's made a pretty consistent move, pretty nice move here on Friday, so it's trying to put this bottom behind it, or I'm giving it the old college try. XLK, which is technology, yeah, it's getting real close. Trying hard. IYR, not as good, but real estate, and then the home builders getting pretty close to overcovering its 50-day moving average, which is the solid blue line there. And then there are just the ones that aren't doing anything. Consumer discretionary, not much of a move there. It looks sideways to me. Same with the industrials. Retail sales with that 1% gain in retail sales, and that's a nothing move. So it's definitely going nowhere. Materials also going nowhere. And then metals and mining, last but not least, completely sideways. Let's Let's take a look at the heat map. This is a 1 week heat map of the S&P 500, brought to you by FinViz visualization software. Some of this is free. You can see that the big glams, Google, Microsoft, Meta, Tesla, Amazon, all took it on the cheek this week. Only Apple was the only one to be able to. There you can see where the banks are trying to make a move. It seems like J.P. Morgan and Berkshire held them back for the week. There's healthcare trying to make a move, but diagnostic services and the rest of the medical devices and stuff is holding it back. There really just isn't much out there that's moving. There, BA is trying to make a move. Boeing. And that's it for this week. I'm Greg Gallagher. Good trading and good luck.